despite the stock market's plunging, which should normally mean people rush to treasuries,
Mm.
the price of US treasuries has been falling sharply, which is unusual. You don't usually get the stock market and the treasury that's going in the same direction, i.e., downwards. So, what's going on is why are people pulling their money out of treasuries when they should be going into treasuries if they're coming out of the stock market?
Friday, April 11th, 2025, Monaco 64, home of alternative economics and contrarian views. Good morning, Clive. A lot happening, of course. Things changing sometimes by the hour. Anyway, how are you doing?
As many of your listeners have written to me to say how am I doing with my back, it's recovering, but we're not over it yet. It's been about a month I've had backache, but I've had every test under the sun, and they tell me it must be muscle pain. So nothing too worrying. I just need to take these painkillers, which I'm already diminishing. I'm down. It was 3 a day, now it's down to 2 a day, so it's getting better.
Great. So, Clive, this morning as we speak here, it's 8:35 a.m. London time. It looks like the world is waking up to the fact that gold is really the ultimate safe haven, especially when things change around so much as they have this week and the previous weeks. I think it was Lenin who said that. Sometimes it takes decades for things to change, but then it all happens in a month or two. It feels like that's what we're seeing. And no matter what you think about the Trump administration, one thing they're doing, Clive, is disrupting the world.
Yeah, I mean, I saw last night, I read an article which said that money is now flowing back into the gold ETFs. You may remember that for years we've had an outflow from the gold ETFs, i.e., the number of ounces or tons of gold in the ETFs has been falling. This article said that the flow has suddenly reversed and the money's going back into the gold ETFs. So it could mean that the man in the street, the general public, are now starting to say, I'm not buying the S&P 500, I'm not buying NASDAQ, I'm not buying the Mag 7, I'm not buying NVIDIA. I'm going to buy something which is moving up, and they're possibly going into gold. So that's the way it looks. It's early stages, but it could be just starting.
Yeah, it's a shame they're going into ETFs. They should go into physical. I'm sure a lot will go into physical, hopefully, because the bullion banks, as usual, they manipulate the ETFs, and you don't really, unless you have 10,000 shares, you can't really take delivery. But that's a good point there, Clive. And just to let the viewers know, right now, spot gold is at 3,211, and last week I think we are talking, or gold got to like 29.50, so it's really moving. And the other thing I wanted to show Clive, you and the viewers is this here. Let me just share this chart. Hold on. There's a term in technical analysis which is called an outside reversal. And let me just move this here. Yeah. So this is a weekly chart. And of course, in the beginning of the week, we traded down to like 29.50, as I said. It's actually earlier this week. And it looked really bearish. I think people are talking about 2,800, even lower. But now it's reversed. And even though it made a new low this week compared to the previous week, and also the previous, like, let's say 2 weeks, gold is now, if it stays above, let's say 31.67, which you never know because it's so volatile. This means it could be an outside week up, which is very bullish. And I think we need to hold on to our seats or hold on to the bull because it's going to get really wild, in my opinion.
I saw that Goldman Sachs put an outside sort of tail forecast for gold at $4,500. I don't know if you saw that, Mario. It
Yeah,
wasn't their central forecast, but it was kind of like the tail end of
yeah,
where they said it might go.
that was a few weeks ago, and I had already. I mean, For those of you who don't know, my background is in the government bond market, but in futures and options. So I've always liked options. The first time I got involved was when I was still at university in Switzerland, Clive, and a friend of my dad knew this broker, and he said, "Oh, why don't you go to his office and visit and see what it's about?" And he explained to me what options were, and I thought, wow, so you can put so much down, and that's the only thing you lose, but it could also multiply. So I bought a call option on coffee that day. I ended up making very little. I didn't lose, but I've always been interested in options, and lately I've been doing some options on gold, and now I also have some options on silver. I think silver is going to catch up. So I bought yesterday, Clive, the 42 call in silver and the 50 call in silver, and they expire end of July. They're the August options, and I did it through spread betting here in the UK. And unless you know something about options, I don't recommend you do. But it's, I think it's about to get very interesting.
Well, Mario, there's something which might interest you. There's something, I don't own any, by the way, but there's something called the perpetual turbo call options available both on silver and gold, and they are effectively perpetual. And the way those work is you have a strike price which is constantly moving. It should be moving by about 3 to 5% a year. I'll explain that to you perhaps
Yeah.
outside of this, but anyone who's interested can always Google those words and find out if they're available in their country.
Yeah, I think you have them in Switzerland. I guess the only thing about the perpetual is that usually an option has a term, so it expires. But if you have a perpetual, you're going to be paying a bit more for it because it never ends.
Well, yeah, technically you don't pay any more because you actually pay only the difference between the spot price and the strike price to the penny, but the strike price is, which is called the knockout price, if you like, is constantly moving upwards. So if the gold price stands still, the strike price will gradually move upwards till it hits a point where it's higher than the spot price, and then you get knocked out and you lose all your money. So you have to either exercise or sell before that event happens.
So I want to reiterate that we're not here to try to tell you to speculate like I'm doing a little bit.
Yeah, I don't own any.
Yeah.
I don't own any leverage bets at all on gold or silver. I mean, if there's leverage, it's gold shares.
This is the first time in years that I've put some options well, bought some options on gold and silver because I think it's going to get quite wild. I still believe, Clive, this is the way forward here. Physical gold, and this is a 1 ounce gold eagle 2024.
Lovely.
And,
That's
and
a nice.
yeah, I listened the other day to I'm going to touch upon Besant again in that interview with Tucker Carlson. Tucker Carlson asked, "Why is all the gold flowing around the world? Why is it coming here?" And Besant actually said, "Well, gold, gold doesn't go bankrupt, doesn't run deficits, doesn't lie." Basically, he could have said gold has no counterparty risk. And I wanted to ask you, Clive, because when Trump imposed those, I think it was on the Liberation Day, it was called April 2nd. Or was it April 9th? Yeah, I forget. There's so many days, but it did say that it exempted bullion. And a lot of people, even experts were saying in the last few months that all the gold, physical gold flowing to the US was because of tariffs. People were concerned about tariffs, and that's why the price is going up. But now that it's been, the Americans said, well, we're not going to put tariffs on bullion, i.e., gold and silver. Gold's still going up. So I think there's a lot more to it. I think the Trump administration has something up their sleeves in terms of gold. And especially as Besson also said that he is a gold bug. I think we could be witnessing the reset of the whole system, Clive. Do you think I'm jumping the gun?
I think the reset is happening before our very eyes. Just on the question of who's actually buying this gold, it could be the U.S. Treasury, and of course we speculated in the past that maybe it's Berkshire Hathaway, but there's another one out there which might be a buyer of gold. As you know, America has almost gone to war with Canada. At least it's a trade war. Their best friend, Canada, across the border, suddenly has become their worst enemy when it comes to trade. And Canada's really upset about that. So Canada has no gold, or did have no gold, but maybe they're saying, well, screw it. We can't, we've got all these treasuries, US treasuries. Can we trust the Americans, who were our friend and suddenly seem to be our enemy? Can we trust them? Let's switch into some gold. It could be the Canadians are buying the gold.
It's possible. It's possible. I was thinking about that. I don't think there's going to be. I mean, it's a bit rocky right now between the Americans and the Canadians, but I think, Clive, it's just like when a husband and wife have a really bad argument. It doesn't mean it's going to be bad. And I think Americans and Canadians are quite. They will resolve things eventually.
Hmm.
But that's a good point. We spoke about Warren Buffett as well, that he could be. I mean, he has 332 billion in cash. And Clive, I wanted to show you this as well because I've been kind of rubbing. Let's see. I've been kind of rubbing this in the face of the FT for years, right? And when they
Oh,
wrote
yes.
gold, and gold at the time was 400 ounces, they said gold was finished. But even the FT is admitting now, and this is from today, 8 minutes ago, gold hits all-time high as investors seek haven assets. So there you go. I mean, for many decades, except for people like us, Clive, people thought of gold being as risky and just a commodity. They didn't understand that it was really money, just like JP Morgan said.
Another little bit of news as to potential buyers of gold would be Chinese insurance companies. Very recently, China authorized its insurance companies, which, by the way, are absolutely immense as part of the financial system. It authorized them to buy up to 1% of their reserves in gold. So it could be that the insurance companies collectively are on a race against each other to get that 1% in gold.
Yeah, no, I saw that. That story came out a few weeks ago, and
That's it, yeah.
it's big. It's big. Some people equated that to when Reagan deregulated the stock market to American insurance companies in the early 80s. Clive, the dollar as well against the other fiat currencies is very weak. Well, relatively weak. And I say that because I'm going to show a chart later. But this morning, for example, the pound is up 2/3%. The euro is up 1.2%, and the Swiss franc as well. While the dollar is down zero point 0.9 versus the Swiss franc. So it seems like the euro, for some reason, is really. Do you think it's going up because it's the most liquid fiat currency after the dollar, and people are kind of concerned? Well, yeah, there's uncertainty about the dollar now because of everything changing
Um,
every other day. So here's a chart of the euro. It's a breakout versus the dollar, but of course, it's been a lot higher in the past, the euro versus the dollar. As you can see, we got to like 160 back in '08.
I mean, I think there's a question of who can you trust? I mean, everybody in the world likes to know where they stand, and we've had this tariffs on, tariffs off, tariffs on, tariffs off, and it's been a ping pong game. And suddenly President Trump has been making enemies, then making friends, then making enemies, then making friends, and it's backwards and forwards, and nobody really knows where they stand. So I think we've got this uncertainty moment, and people are saying, well, perhaps I should have some of my reserves in something other than a liability of the United States. We are talking about what is effectively a bankrupt country. If you look at the level of national debt, which can never be resolved, And we've obviously got behind that, we've got the Federal Reserve, which is becoming more and more deeply insolvent. So people are saying perhaps I should have something else. And I'm not saying that the euro is the greatest place to park money, but I think perhaps central banks are diversifying a bit away from the dollar here. And where are they diversifying to? It could be the euro, it could be the pound, could be the Swiss franc. And of course, we're seeing them buying gold. We know that.
Yeah, I just see here China's Xi to visit Southeast Asia as trade conflict with the U.S. widens. The other thing I wanted to say about China and Xi, I detect, I'm like in the UK. I'm originally from Brazil. I've got Italian passport. I've lived in the States, but I detect a lot of jingoism on the American side and probably on the Chinese side as well. But I think that's also going to resolve itself. I think President Trump wants to do a deal with China, and he even says, "Oh, I'm a friend of Xi." So I think a lot of this is just like positioning, Clive, and a lot of the comments are just yeah, to get the public on your side, either in the U.S. or in China.
So they're playing a game of chicken against each
Yeah,
other. They're waiting to see who will blink first.
yeah, yeah, that's right. I mean, some people thought that Trump blinked a couple of days ago. That was my first reaction, but a lot of people are saying, "Oh, that's what he was really planning to do." I mean, that's impossible to say, and I'm not. What do you think, Clive? The other day he
Well,
paused the
I mean,
those.
it was crazy. We had this for sort of 3 or 4 days of craziness where one day he announces these huge tariffs on every country around the world. Then there's a rumor that there will be a 90-day suspension, and stock markets have been plunging. The stock markets soar on that rumor. Then the White House denies absolutely no question whatsoever. We're never going to have a 90-day suspension. Stocks plunge again. Then they announce they have a 90-day suspension, and stocks soar. So it's all over the place. This is craziness. That we haven't seen in years. So the false rumor, suddenly becomes a true rumor.
Yeah, Clive, I thought about that because it was on Monday, that rumor. My conspiratorial mind tells me that maybe they put that rumor out and denied it just to see how the market reacted. And then a couple of days later, they decided to actually put it out there. And there's some people arguing that a lot of people made a lot of money from that. I don't know. But
Well, talking about making money, obviously with these tariffs, there'll be companies from all around the world approaching the government ministers to try and get some special deal for their particular industry, for their particular company. And, when you're asking for special deals with government ministers, I'd like to think that everything's above board and there's no I'll employ your daughter if you do this or anything like that, which would be a corrupt practice. But perhaps I'll just draw everybody's attention to the fact that in February, President Trump issued an executive order pausing the enforcement of the Foreign Corrupt Practices Act, which was the US anti-corruption law that prohibits bribing foreign officials related to US companies.
Clive, that's huge because that Foreign Corrupt Practice Act has actually been very bad for foreign companies. And like, for example, the French company Astom, that collapsed because of that. And actually, it's a good thing for the rest of the world that he canceled that. Actually, yes, it might make it more susceptible for corruption in the U.S., but the U.S. used to use that as an instrument to punish big foreign companies. Sorry, I interrupted you.
Yeah, so obviously they've already been forced to drop a couple of cases in the USA that were pending, where people were being charged with alleged crimes under the Corrupt Practices Act. So they've had to drop those cases. But of course, what this does mean is that if money is changing hands in an inappropriate way, the USA is not allowed to start new court cases, at least not for the next 180 days.
Yeah, and I want to talk a little bit here about I've got the dollar index up here, Clive, and as you see, we're breaking 100 right now. It's
Yep.
99.81. But
So the dollar. Okay, sorry,
yeah,
Barry, go
yeah,
on.
I just want to continue. But one thing I want to say is the dollar index was created in March 1973, right here at 100. It started at 100. The reason there's quotes prior to 1973 is because you can backdate it because it's just the weighting of currencies. But my point here, Clive, is that in 1973, when it started at 100, gold was at $85 an ounce. So yes, the euro is moving up a lot. The Swiss franc, even the pound is moving up versus the dollar. And people are saying, oh, the dollar is going to collapse. But I think it's not just the dollar collapsing, but all currencies versus gold. We need to not be distracted by the dollar index, even though, Clive, in the short term, a drop in the dollar index does help gold. But notice how the all-time low here in March of '08, and I remember this day when this happened, this low, that was when JP Morgan took over Bear Stearns and gold topped at 1,031 and the dollar index dropped to just under 71. And here we are at 100 and gold is at 3,200. So it doesn't necessarily mean in the long term that if the dollar goes up, that gold will go down. And I would focus, of course, on stacking gold. But I can understand why big corporations, big hedge funds and stuff, they will go to the euro or to the Swiss franc. But maybe they need to learn, Clive, how to get more involved in physical gold. What do you think?
Well, there's probably rules preventing many types of funds from holding the physical, so they probably have to hold it through derivative instruments such as ETFs or things. But yes, I think anybody who has the flexibility to hold physical gold should have some physical gold, just for the unforeseen emergency when they say you can't go to the bank and get your gold, so you need to have it where you can get it.
Yeah, and the
Can I just talk about another
other,
interesting thing which is going on this
yeah,
week,
yeah,
Mario?
sure.
I don't know if you've seen it, but I'm sure you have seen it. The Despite the stock market's plunging, which should normally mean people rush to treasuries,
Hmm.
the price of US treasuries has been falling sharply, which is unusual. You don't usually get the stock market and the treasury is going in the same direction, i.e., downwards. So what's going on is why are people pulling their money out of treasuries when they should be going into treasuries if they're coming out of the stock market?
Well, yeah, is that your question? Why there? Yeah, I think it's a lot to do from what I've heard from a good friend of mine who is retired now, but he worked in the bond markets and he started out in the mortgage-backed securities market, Clive, and he still has contacts there. And apparently, there's been a lot of selling in mortgage-backed securities. And guess who are some of the biggest foreign holders of mortgage-backed securities? Well, it's Canada and China. So if you want to hurt the U.S. economy, you can sell some mortgage-backed securities. And the reason why this has affected treasuries, and I have the 10-year yield here, which is spiked, as you said, the price goes down, the yield goes up. But the reason it affects treasury, my friend explained to me, is because there's no derivatives for mortgage-backed securities. So the way they hedge the drop in MBS or mortgage-backed security is through the treasury futures. So yeah, and Clive, it's like the dollar, isn't it? If you're not confident or if you don't trust the issuer of the currency, i.e., the U.S., because of what all the all the stuff that's going on, you're gonna also maybe try to decrease the amount of treasuries you buy. And there's talk as well, Clive, that the Japanese are selling treasuries because the yen is also getting really strong.
Yeah. I mean, clearly there's a move by somebody to sell their US assets. Stocks are going down, treasuries are going down, the dollar's going down, and the non-US asset, which is quoted dollars, gold, is going up.
Yeah, yeah.
So that's what I see. I see a generalized movement away from US assets in the USA towards something which is nobody's liability, i.e., gold.
Yeah, and I don't think this bodes well. As you can see here, this uh, what we had here prior to here, right? I think it was on Friday that it started picking up, last Friday. We had like a head and shoulder top, which would be very bullish for treasuries because that would mean that yields would continue down. And I think this reversal is very significant. And yeah, I still think the US government or the Treasury, they're accumulating a lot of gold. Maybe Clive Trump thinks it's time to do away with this post-World War system. I don't know. I don't know if he
Yeah,
if they're that clever to think, but the fact that over 2,000 tons of physical gold have gone into the U.S. makes me think there's something going on. And what we hear publicly between countries like China and the U.S. and Europe and Canada in terms of the trade war is just kind of like you said, they're just positioning themselves, playing a game of chicken, so that eventually they'll have to sit down at the table, and whoever has the gold, right?
he who has the gold makes the rules, as they
Yeah.
say.
So if you don't have any gold, you won't be able to sit at the table. So maybe Canada, like you said, might be buying some gold because Mr. Carney won't be able to sit at the table if he wants to negotiate.
Correct, correct. Yes, so it'll be. I mean, I think we in the due course of time we'll know all about this. But at the moment, you don't have to know who's buying the gold. You just have to know that someone is buying the gold. Normally, when stock markets fall rapidly and suddenly, you'd expect the gold price to come off in sympathy because there's margin calls going out and people have to raise cash, and also you've got the bottom fishers saying, "Wow, stocks have fallen. I'll sell a bit of gold and buy some stocks." But it seems that's not been happening because we see today that gold is an all-time record level, and stocks are, if you look at Nasdaq, it's nearly 15% below its peak. So we have this very unusual situation that gold is not acting in sympathy with other assets. It's the only asset which is going up this week.
Yeah, and I guess we could say that gold and silver did get a hit in the beginning, I think early, I mean, last week and early this week, but it's been a very short-lived correction. And as I showed earlier, we've kind of reversed. We have an outside week now in gold. And Clive, just want to let's do a little bit of comparison, year-to-date comparisons, because I think that's really important to keep the bigger picture. It's like not focusing on the tree, but on the forest. So I prepared this before we came on. I've got the GDX J here, the junior miners, and well, we're up almost 30% year to date, Clive, the junior miners. So despite this, yeah, from Thursday to Tuesday, we saw a big correction alongside the general stock market. But now we've making new year to date highs, and then we have GDX. That's the bigger mining shares. They're up 33% on the year. Same kind of action. And then if, like you said, we look at the stock market, the Dow's still 7% lower, S&P 10% lower, Nasdaq 15%. And then you look at TLT, which is like an ETF that represents long-term treasuries. That's down 1.31% year to date, which is better than stocks, but not as good as gold and silver. And I'll get to gold and silver here. So there we go. Gold year to date, 21.7%. And even silver, I think, Clive, earlier this week when we got down to like 28.60, I think, or 28.30, it was down slightly on the year, but now it's back up. So what do you think
Look
this?
at look at the last column, the 3-year column, Mario.
Yeah, 62 and
Gold is up 62%, and all those other metals and silver's up 21%. All the other metals are well down.
I
So
think
gold is doing very well against everything.
I think these, yeah, more of a monetary metal, and silver is part industrial, part monetary. But I actually think, Clive, that even these base metals, they're going to start picking up relative to paper assets. Do you think we are? What's your opinion? Do you think we are actually seeing some money shift from well, some people are starting to realize I need to shift some of the capital of my fund or pension fund towards more towards gold, silver, and hard assets. Do you think that's beginning?
So gold is an early mover for obvious reasons, which we've talked about. As far as the other commodities are concerned, they will be much more influenced by the business cycle, and we're currently going into a recession, I think, which kind of explains why they haven't done very much. But at some point, and I don't think we're that far away from it, the Federal Reserve, and I'm talking probably towards the end of this year, the Federal Reserve will be forced to step in, as will other central banks potentially, as buyer of the last resort of government bonds. And when that happens, that is effectively QE all over again, just like we had in 2008, just like we had in the COVID crisis of 2020 and onwards, where they pump a lot of money into the stock market. And that means that businesses start to recover, turnover starts to increase, and of course at that point commodity prices should be taking off. So I think what one has to realize when you're investing money is where exactly are we in the business cycle. So where we are now, there's a distrust of government debt, and people are moving into gold. As we go down the line, we get to the situation where people will start to anticipate the central bank going into QE. It won't have happened yet. And at that point, you'll see stocks and shares generally rising very rapidly. And then we'll have the QE. And then with a bit of a lagged effect, general commodities will be going through the roof as well.
Yeah, Clive, I've got a chart here. I'm going to bring it up, and I think I've spoken about it a few times on the channel, and also I've posted it on X a few times, and I've got it saved in what's it called again on my Keynote on my Apple Mac, and I changed it this morning because the last time I did it, it was still at 2,800. And now it's at when I did it, it was just below 3,200. And I always like to compare it to the chart of the German mark in the during the hyperinflation. And I know the period of time is different, but I'm sure you heard of fractals, Clive. It's like waves look the same, but their amplitude is not the same. You know, they're smaller or bigger. And I think this is a worrying chart here, and I think it's why so many central banks and even you know, we don't know, but it looks like even the U.S. Treasury wants its gold back, and even Germany, Clive, the new government. Well, I don't think they've taken power yet, but some important people there, they want their 1,200 tons back from the New York Fed, it seems. What do you think is the probability of seeing this kind of? I'm not saying we're going to get to $1 trillion in, the price of gold, but we could definitely go a lot higher. And it seems worryingly similar, these two charts to me.
Gold, over since we came off the gold standard in 1971, gold has moved in waves, an up wave, a down wave, an up wave, a down wave, and now we're in an up wave. My feeling is that this is actually going to be the last upwave. When I say the last upwave, I mean it's an upwave which doesn't have a downwave which follows it. It just carries on, and at some point something will break. Whether we have a Liz Truss moment in the United States or who knows what, but something breaks and they suddenly start out with a new kind of financial system. We've discussed that in other videos, but in simple terms, if you have government debt like bonds, or if you have cash in the bank, you're probably going to be the loser in such an environment. Whereas if you have an ounce of gold, it will still be there.
Yeah, and I think it, w- it there's a saying that gold doesn't make you rich, but when everyone else around you doesn't have anything, and you do have an ounce of gold, uh, you will seem rich to those who don't. That's what I would say, Clive.
Yeah, I mean, let's look at it this way. If you were in one of these countries, many South American countries have gone bust in the last 50, 60 years. And if you had been in one of these countries and you happened to own one of their gold coins at the time they went bankrupt, well, you still had your gold coin. You could still exchange it for dollars and get it. And if you had to change those dollars into your domestic currency, which would be madness at the time, you would have been able to buy infinitely more domestic currency.
Yeah, Clive, just wanted to talk a little bit about the UK because that's where I am and that's where you were originally from, and a lot of the viewers are here. We had some GDP numbers today, and they were like really good numbers. They were forecast to go up zero point 0.1 for the month. It went up zero point 0.5. So you can see here. But the people who published this, they've come under a lot of scrutiny in the last year, the ONS, because I think most of the people working there work from home, and there's a lot of criticism. And it just seems to me weird that this number has come up like this, very strong. I don't know if you remember the guy from the European Commission, Jean-Claude Juncker. He said once when things get really serious, I think it was during the sovereign debt crisis, he said we have to lie. So I kind of wonder, are these numbers real? But at the same time, if they are trying to fudge the numbers to make it look better, it's actually not going to help because look at the 10-year gilt yield, Clive. It's approaching 5% and it's up 13 basis points today. The 30-year is almost at, well, pretty soon we could be at 6. And the other one that I follow is the 15-year gilt yield, Clive, because the average duration of UK debt is 14 years. So, yeah,
Over 5%.
yeah, I know. So, yeah, they're playing a dangerous game, in my opinion. But they can always use the excuse that it was the tariff wars. But I think the Bank of England, like you said, and other central banks, before the year is out, they're going to step in again. I think that there are people saying that the Fed now are going to cut rates 5 times this year.
Yeah, I mean, I actually think that's a likely scenario. They will cut rates, but it doesn't mean to say that the yield on the bonds, the 10-year bonds, is going to go down. I think that will be the surprise that people are going to have. They'll see the short end going down and the long end going up. In other words, we'll have a very steep yield curve because there'll be a reluctance generally among foreign central banks to hold more government debt. And of course, the government's got a lot of debt to refinance this year. Don't forget that we're in a debt ceiling at the moment, but the yields are going up anyway. So debt ceiling means the US government is not allowed to increase its debt, yet people are still selling their treasury bonds. So it's not because of new supply of treasury bonds, it's because people are trusting US treasuries less than they did before. So what's going to happen when they eventually do raise this debt ceiling? They have no choice. They have to raise it by August at the very latest, or the USA will default. And I don't think that's going to happen because they've done this about 90 times before they get to the 11th hour and then raise the debt ceiling. But when they do raise the debt ceiling, the USA is going to have to borrow hundreds of billions, if not trillions, to refill its coffers and keep paying the bills. And it's got to refund the money it's taken from the government pension funds to keep paying the bills. So it will have to refill its coffers. So what if the Treasury prices are going down when there is no new supply, what is going to happen when there's a massive new supply of Treasuries coming onto the market, probably from August onwards?
Yeah, it's 9 trillion they have to roll, I think.
Well, there's the rolling of the old debt, which will be rolled at a higher interest rate than the average rate they're paying at the moment. So that's one thing, which is obviously raising the interest charge on the national debt. But the other side of the coin is the deficit, which is being generated by the United States. Now, I just mentioned there was a little bit of good news in March. The deficit for the month of March was actually less than that of a year ago, but it was still pretty high. So the government debt is continuing to grow at a very fast pace. When I say debt, the debt is not growing from January to when they raise the debt ceiling, but obviously they're spending other people's money. They're taking it out of the pension funds, and they've run down the Treasury balance. But they're going to have to replenish all those in probably August. So yeah, it's going to be there's going to be this massive new supply coming towards the in the third quarter of this year, and I think that that might well push the 10-year yields in the USA above 5%, and that's the point I think of pain where the Federal Reserve is expected to step in and start buying treasuries by printing new money, of course.
Yeah, Besant said 5% is where he'll probably be awake at night. I saw Clive the other day, or yesterday, someone noted that the deficit in the first 6 months, and the fiscal year starts October, so it's $1.3 trillion, which is I think 20% higher than it was in the first 6 months last year. Yes, for April, they receive a lot of tax receipts, but they still think it's not going to be a very good deficit number. So what are you doing? Are you still sticking to your balanced portfolio? I know you like diversification, or are you like shifting over a little more towards gold, silver, and hard assets?
Or talking a little bit past tense, in the current year, since the 1st of January, I've increased my exposure to gold and I've increased my exposure to gold mining stocks. But I want to proportionalize that. These are very small shifts which are going on. Obviously, I've had a much larger shift because of the the general rise in prices of these assets. But I think this is my personal view. I think it makes sense to be diversified and hold all kinds of assets because we do not know what awaits us tomorrow. We do know some things. We know that the value of cash, money in the bank. We know the value of bonds. You're buying something which is not going to be worth anything down the line. So those are things I don't go for. But if you're buying tangible assets, whether it be property or equities or gold, or there's some other things which I can think of, which like works of art, for example, if you're buying these sort of assets, they're likely over the long term to still hold their value because people always want to have them. So it's not that I've been shifting into these types of assets because I haven't got any cash or bonds to shift out of. It's more slightly shifting from the technology. I've disposed of all my technology stocks. They've gone, and I suppose the majority of what I got rid of went into the gold market in one way or another.
Yeah. So just a final question, Clive, because you said the debt ceiling comes up, I think is it August, and they always in the 11th hour they raise it. Seeing that Trump has done a lot of stuff that is disruptive and unprecedented, what do you think is the likelihood that he will allow a default? Because that would be, I mean, I know that on the other side of the debt, there's a creditor, and that a lot of Americans depend on government, government payments for Medicare, Social Security. But do you think that would be possible?
Well, I think the behavior so far shows that it is a higher probability than it has been. I think maybe it won't be a default in that sense, but rather I think there'll be pressure applied to foreign governments who are friends of the United States in return for trade deals and all kinds of other things and tariffs to say, we want you to invest in these low interest 100-year bonds that are being talked about. And you're going to, even though they're a lower interest than you're getting on the treasuries, you're going to swap some of your treasuries effectively into these long dated bonds, and you're going to call them. You're going to give them the value for your purpose of your foreign reserves. You can call them being worth what the face value says, even though in reality nobody in their right mind would want to buy them. But so there will be pressure, there could be pressure placed on foreign governments to load up on that kind of debt. And maybe the governments will find they've got no choice as a sort of sweetener to the United States to get some sort of deal on the tariffs. So, if you hold 10-year treasuries at the moment, there is a risk you might be forced to swap those into something much longer dated, much lower interest rate, and worth a lot less. So that's one of the reasons why I think people might be coming out of treasuries already, because they're fearing that pressure might be applied down the line.
Yeah,
And that's a sort of default, even though
yeah,
you'll be doing it. I say your government will be doing it voluntarily.
yeah. I think it's a big gamble, even though I understand the strategy. A big gamble for the U.S. because other countries might say no, we don't want that, and because we're already seeing that the EU, and I'm not praising the EU or the Chinese, they want to get a closer relationship now with China. So who knows? It's very interesting times, and it makes you wonder, Clive, if the EU hadn't been so belligerent against Russia, they could be like making up with Russia and saying to the U.S., "Don't worry, we've got all the energy we want from Russia." But I think the EU has shot itself in the foot there, and it might have to accept maybe some of the perpetual bonds from Trump. He might put in a sweetener saying that the bonds are gold backed, but you can only get the gold after a
A
hundred.
100 years.
Yeah, so there you go. For us, Clive, I think, and the viewers, uh, and this is Jim Sinclair who used to say this, you need to remain your own central bank, i.e., have as little on deposits on deposit with banks because what you think is money with a bank is not, it's an unsecured loan legally, Clive. And yeah, that's why I'm going to continue to try to stack. Yes, gold and silver miners are speculative. I personally think you need to be careful and only put in how much you can afford to lose. But it's up to the individual. And Clive and I are not giving advice. We're only giving our opinion. And with that, Clive, I'm going to wish you a great weekend.
Before we go, Mario, may I just give a small one statistic for all those people who think the end of the world has come? Um, China's exports to the United States represent 14% of their exports. In other words, 86% of China's exports go somewhere other than the United States. So to turn that 86% back into 100, they only have to negotiate a little bit better with their foreign trading partners other than the United States.
Yeah, and Clive, I just wanted to, yeah, very interesting. I noted that the other day. I just wanted to, because the FT's come out and said U.S. consumers warned of higher prices from tariffs within weeks. What I want to say, this is not inflation, and this is prices. Don't forget that inflation is a monetary phenomenon. Uh, but at the same time, though, Clive, with the gold price going up, that just means that all fiat currencies are becoming worth less. So there you go.
Oh, I saw a funny article. I think it was Reuters about the man in the street of the USA. Apparently, there's a whole bunch of people who are now going into the stores and buying up Levi's jeans, Wrangler jeans, Nike sport shoes, and other luxury brand clothing, which is coming from China and other countries, on the grounds that within a few weeks the prices of these things are going to be much higher, and they think they'll be able to sell it on at a premium.
Well, that's a good point, actually. I think a lot of this stuff now is also made in Vietnam, and I think Vietnam is basically a proxy for China. But anyway, Clive, hopefully we'll talk on Sunday on the live stream.
Look forward to it, Mary. Bye bye now.
Bye.